So what's up guys? Welcome to my YouTube channel Investing with Ralph, where I talk about everything investing and investment. If you are new to this channel, click the subscribe button and the bell beside the subscribe button. Click on it so you get a notification whenever I do a new video. If you see this on Facebook, like, comment, share and follow the page. Alright, so on the 3rd, I was supposed to do uh, a webinar like on Zoom, but for some reasons my internet kept messing up. So I have to just do the recording and then put it up here. So for all of you to see what we're going to discuss, what I was going to discuss in that class, and the title is going to be diversifying your portfolio, your investment portfolio. I didn't actually add or remove anything in this slide. It's like the same slide, just like my other Zoom classes that I usually hold. So first thing you need to know is that diversification is a very bad idea. Contrary to what you have been taught or what you have known till date, it's actually a very, very bad idea due to a couple of reasons. Because most people don't know what diversification is, they don't understand it. That is another issue, and they don't know how to go about it. But let me just break it down for you first of all. So, when you have a business, right? It's important you stay within your area of competence. I'm just trying to explain why diversification is a bad idea. So if you move out of your area of competence, let's say I sell clothes and I begin to go sell milk. You see, I'm trying to distort my area of competence, which is selling clothes. I diversify is the word that they say. I diversified into milk. So thereby splitting profits that I could have used to pursue one course and focus on that strength to expand more. Like you can see, if you focus more on your strengths instead of scattering your resources, you are going to if you don't focus more, you're going to lose a lot in the long term. You will really, really lose a lot. You could make more money and get more expertise if you actually focus more on your area of competence. This is why you don't diversify when you have a business, because you don't see Coke going to make shoes. Nike does that, and Nike will not go and sell a bottle of drinks. They will not do that. They might sell you a bottle with their clothes or shoes, like a sports kit, but that's the most they can do, and probably they won't produce the bottle. Probably have a company producing the bottle. Another good way to give this example is McDonald's and Coke. So like McDonald's doesn't make the Coke, but they partnered with Coke to deliver Coke with their meals. So it's like they didn't just go making soft drinks because they are big enough as McDonald's. They focus on making the burgers, while McDonald's the burgers and the fries and whatever, while you just go and get the Coke and we pay Coke for it. That kind of stuff is what I'm talking about here. People need to learn to focus. You see a lot of these guys. You know what? I'm tired of all these teachings seriously online that I see or I watch on YouTube or I just see people read about. People don't know what they are saying or doing, and they just go ahead causing confusion in the whole uh, industry. It's really messed up. People walk around with this type of ideologies trying to diversify their funds. But I'm going to show you guys a lot of things. So focusing on your area of expertise kind of helps you um, for expansion. I've already said that. Now let me tell you this. So diversification is actually a good idea. It's a bad idea, yes, if you are going to be disoriented and scattered and what was the other word I was looking for, and not focusing on what earns you the most money. It's a very, very bad idea. But it's also a good idea, if you can make a lot of money from what brings you money, and then you turn over your money to people, or people that understand those area of expertise or competence you want to diversify to or invest in. I will use the word invest, not diversify. So let's say Nike wanted to make, like I've already explained, Nike wanted to put a bottle in their kit, in their full sports kit. They will not go making the bottles. They will rather carry the money and invest in something like maybe Coke or a bottle company to produce the bottle for them, and they add it to their kit. You see, they're kind of spreading their money and making money from that bottle, but they are turning over the power to people that are focused on making bottles. So you need to partner with people that have focus. Let me just give you more examples. This whole talk is really much about paper and assets management. I would say, paper investments. But I just wanted to start from the whole business aspect, because some people have jobs. It's not just business. Some people have jobs. Some people are professionals. Some people are professionals like doctors. Some just have regular jobs like maybe salespeople, marketing department, or IT. While some have their own businesses, so they kind of make a lot of money. As long as you make money, you have to stick to this rule. Focus on what brings you the most money, expand on it, make more money, and then turn over the money or part of the money, which is not, or maybe like 30%, or let's say 30% should be enough, and then put it in other things. So I just dropped it down here. See, when you have cash saved up from your job or your business or hustle, that's my thing there, hustle, you can now invest in other investment vehicles like real estate, which is very important. To me, real estate is like the lord of all investments. Like nothing can ever beat real estate investment. But you could, that's my opinion. You could have different opinions. You can invest in bonds. Bonds are really good. Stocks, kind of unstable. Stocks are actually unstable, but they can give you the fastest wealth. I'll also show you something. And then commodities like gold, silver, copper, palm oil, like crude oil. What other commodities there? I think there's what's that? Platinum. What's that other one? Okay, just let me just give you just this few. Then there's cryptocurrency is another way to invest your money. But it's very very unstable, and seriously speaking, there's a lot of things that could go wrong with crypto. This is a serious invest at your own risk situation when it comes to cryptocurrency. Like super unstable, but it can get you rich very fast, like super fast. So let me just do this right here. So I kind of divided this whole slide into two, and I did it because of this. I wanted to show you all the asset class and explain them to you. So this right here, these are assets, investment vehicles. So I want to just explain how you are going to be spreading your money in between them. So the first thing you need to do is, real estate is important. You could start with real estate, but real estate is very expensive and it's illiquid, which means you can't actually sell it off when you want to. You can't sell it quick enough. Like if you buy land right now, selling it is another issue. It's kind of difficult to sell. So real estate could be land, and then real estate could be properties. It could be rental or commercial, or just residential. So that's what it is. But land still beats rental property. I could have a lease on my land, and then I could have a lease for like 99 years if I live that long. Anyways, I could have a lease for 99 years, and then I would then someone will put a house there or a building complex and keeps paying me rent on the land. So the land still belongs to me. It doesn't matter what they do. They could put other buildings on top. I still have that rent, and I could still sell the land to top it all. I could still sell the land. So that's how important land is. Rental properties are good, but like land, you don't require maintenance and all those things that come with real estate, like real properties and security and all those things. So land is kind of just there. Just get it and get it. That's all. Get the properties and that's all. So it's still the top investment asset for me. But because it's kind of expensive to acquire, so I always advise people to look out for other things like bonds. Before I get into this, bonds right here are like the one of the safest investment assets you can ever invest in. Super safe, because you see, it's like what a bond is like an IOU. No, you borrow the government. Let me just use government bonds. You borrow the government money, and the government is like, okay, government is like, I'm going to be paying you like let's say 4% per month, or 2% per month for like let's say 5 years. So that is what bonds are. So lottery winners are always advised to use bonds, to use very very low interest bonds, because if you win a lottery of let's say 100 million, and the interest on that lottery is let's say uh 10%. Sorry, the interest on the bond is 2% per month. If you give the government that 10 million and they pay you 2% per month, I think that's about 2% per month. 10% is 100K. So 2% per month should be like 20K per month. So a human being can survive on 20K per month. $20K per month. So that's why bonds are actually good. For people with a lot of money, it's good to actually, and it's very guaranteed and safe, backed by whatever government bond you buy. There's also municipal bonds, and then they have like bonds that government raises for projects. They also have bonds, corporate bonds. But that's an entire talk. But just know that bonds are actually good for you. But it helps to preserve cash value. That is, suppose your inflation rate is not messed up. Um, but bonds really, I would say, if you have large cash, I would say you should go for bonds. It's actually nice and it can stay for as long as the duration is right there. There's So bonds are good, real estate is good, but I'll prefer to buy real estate before I actually get a bond. So there's commodities. So commodities right here. Okay, guys, just hold on. Okay, all right, I'm back. So commodities, like I said, like gold, they're also stable depending on how you buy. Like there's this thing I read up somewhere, and it says gold. I've not confirmed that, but you could help me confirm. If it's right, you could just drop it in the comments for me. So gold is the same price everywhere you go in the world. So it gold actually adjusts itself to the inflation of every country or currency. So, for example, when the stock market crashed and gold was rising, that means there was inflation and money was being in circulation. That like, there was a lot of money in circulation. So gold just keeps gold just represents like how will I put it? Gold just represents economic value to some extent. I think that's the best word I can use right here. It helps preserve cash value. Gold can preserve cash value for a very, very long time. In fact, it's actually rated the same with real estate. And the beautiful thing is you can move gold around. You could just move gold, but you can't pick your land from like USA to Nigeria or US to Kenya. Now it just stays there. But you can pick your gold, same value, and come to Kenya and just convert it to Kenyan money or Nigerian money, and you just move on with your life. There are other ways to do this. I'm just giving an example. Is a hedge against inflation. So all paper money is has inflation. Even the US dollar has inflation. But you will notice that if you have just an ounce of gold, it still preserves its value for till whenever it's converted to cash. So that's the beautiful thing about gold. It's also liquid. You can convert it to cash at any time. That's gold. I'm just giving an example of gold. There are other commodities you could check out if you really want to invest. Commodity investing is like um a whole other thing. It's a whole topic on its own. So I'm just giving like, let's say, brief topic. So the two assets I really want to talk about, you guys should focus on, is stocks. It's actually unstable, which is the truth. You see, it reacts to news, so there could be a crash, there could be a rise, there could just be a flat out curve, and just there. And you really need strategy to invest in things like stocks. You need to understand it. You It's liquid. You could convert it to cash at any time. Oh, unregulated. I think this is an error right here. It's supposed to be regulated. I'm sorry about that. I just made this mistake here. It's supposed to be regulated. It's a regulated industry, so the government actually um watches over the stock market. So at least they will get bad eggs if anything goes wrong. And it requires little entry. Commodities, actually buying the commodities themselves, require little entry. So like if I wanted to buy, I'm just talking about commodities. Like if I wanted to buy $10 or $100 worth of gold, I could. So it also requires little entry. I'm just dropping it down there. So stocks require little entry, which is why I am which is one of the bases of my YouTube channel, and YouTube stock discussions, because it requires little entry. Like this, I could buy a $10 worth of gold. I could buy a dollar worth of stocks, $10 worth of stocks. So the average person can actually do away with $10, but you need like a lot of money to invest in real estate and bonds. So that's what my focus here is, on the stocks. And then the other asset I want to talk about is cryptocurrency. I don't talk about this much yet. I have been thinking about when I'm going to start talking about cryptocurrencies, but not yet. I know I did a video on a particular cryptocurrency program. I think it was Tron or so, for Tron. The link will be up or in the description though. So uh, cryptocurrencies are very, very unstable, and you really need to understand it. But let me just give you a straight out strategy. Anytime the market, this is just me. This is what I usually do. Anytime the market falls, I buy. Anytime it rises, I sell. Most of it anyways, not all. So I do some holding, but not that much. Then it's very, very unregulated. There is little regulation in the cryptocurrency space right now, even though the government is beginning to come together and see how they are going to address the issues. Like the SEC of the US is beginning to do that. They're beginning to monitor transfers, and right now it's now easier because they can now track wallet transfers, and they could block wallet transfers using exchangers. So it's becoming a regulated industry, which is good news. And the big players will soon start coming in when it becomes fully regulated, which is an extra good news. But then it's still is way unstable compared to stocks. It's very unstable. It's still in its trial stages. As you can see, we all don't know where it's heading to. We know that some companies are beginning to use the technology and not the coins. That they are the technology as the blockchain technology, or the other technologies that like the smart contract technology and some other things. They are technologies, and the coins like, let's say, Bitcoin, Ethereum, Monero, IOTA, Tron. They are coins. So there's technology and there's the coins. So the big companies are beginning to use the tech, but they are not considering the coins yet. But I think I do have a cryptocurrency prediction. I will do it sometime in my YouTube channel. So I don't know. Just keep watching out. I'll do a cryptocurrency prediction. What I feel like the future will look like for cryptocurrency. But the good news is the government is beginning to come in, and it requires little entry. Like the last video, a dollar worth of Tron was going to give me, I think, 196 Tron. So you can see how much how much of a little entry this is even smaller compared to entering in stock. So if you don't have much, if you don't earn much, there are like three assets you should be looking at here. It should be the stocks, the cryptocurrency, and the commodities. If you can actually have access to commodities, they are kind of expensive, but if you can have access to commodities, go for it. But focus on stocks, focus on cryptocurrency, but most importantly, you should really focus on your business or whatever is bringing you money, and see how you can expand and make more money. Focus on your area of competence first, then these other parts will just be like shock absorbers. Then one more thing I forgot to add, I think I forgot to add it in this slide, is that you should know that having cash is important, because the cash helps you to make better. If you had like cash stored and there was an investment opportunity, or cash in the bank account, there was an investment opportunity, yes, you can now take advantage of that opportunity. Not that when an opportunity pops up for you, you will be left just looking and lingering and like wishing you had the money for it. So you should have cash stored up, and you should kind of have a security bucket, I will call it, or security or something. Cash is also a security. Like securities like bonds, they are kind of good, because in case there are downtimes, imagine I was in the real estate business and there was a real estate downtime, what will I be doing with my life? So what would be my, if all my assets were invested in real estate, I'll be dead broke. So that's where people coin the term diversification. But you need to be careful here, because you need to put most of your energy in the area of competence, and maybe like 30% of it outside it, and that is 30% of your profit after you have reinvested in your main area of competence. I hope I'm making sense here. I'm not trying to confuse anyone. So just focus on the area of competence. I think this is where I'm done with this slide. Okay, yeah, this is where I was done with it. I was going to do the contact me. Yeah, so you can always just reach out to me. That's my email, and this is my Twitter handle. You can just DM me. You can DM me at any time. I'll answer you when I see the message. You can at me. I might not follow you back, but you can just at me. If you at me, I'll that's if you tag me, that's what I mean. If you tag me, I'll definitely respond to you. Um this is my YouTube channel. Please subscribe, and then click the notification bell too. Then on Facebook, I'm on Facebook. So this is the Facebook page. Uh I'm actually not on Facebook. Just have the page anyways. So it's the Facebook page. Follow the Facebook page. Like and share. I have some really good content there. I'll just upload this content from here to the Facebook page also, in case people don't have access to YouTube. So it's a win-win for everyone. Then this whole entire thing is brought to you by CodeSideAcademy.com, because they are the ones that actually hosted my course. So I have my course on YouTube that I had investing in stock market for beginners. I kind of took that course down and from YouTube, and I said to use Coursera Academy. They came through for me, and I'm using their platform. If you want to enroll for the course, which I highly recommend, you know about the stock market, because the stock market and the crypto market are kind of alike. In fact, they are very, very alike. If you understand the terms in the crypto in the stock market, you understand the terms in the crypto market. It's not going to confuse you. I actually started reading about stocks, and I understood stock before crypto market, but I first started investing in crypto market, that's in cryptocurrencies, before I started investing fully in stocks. Fully is the word, fully, not So I was there before, so it's just I went full into it later. So investing in stock market for beginners. The link for the course is going to be in the description. It's going to be in the description. So click on the description. You can also mail me. I can send you the link. You can go to this website, coastalacademy.com, and the link will be right there. The course will be right there. I'm sorry, the course is right there. It's just want me by me investing with Ralph is right there on coastalacademy.com. I also have a second course. It's my insider class. I'm still running it. So the insider class is creating. You're going to learn how to create your own investment strategy, your own stock investing strategy. So you should just uh my insider class is right there, and you're going to be one-on-one with me on Telegram. I'm going to be showing you some things. I'm going to be doing this insider class till December. Everything's going to stop in December. I am also going to be stopping my Zoom classes in December. I was just doing this because I was doing this thing they call, like, I wanted to do like what's the word? I wanted to help at least 100 people understand the stock market before the end of December. That's before the end beginning of 2021. So that's basically why I started doing these Zoom classes. So I just, and I'm glad I'm getting the feedbacks. I think I'm going to stop doing the Zoom classes, and I don't trust my network anymore. I'll just be uploading it on YouTube and telling people to also just go to YouTube. You can join my mailing list. All my mails will stop in December. That's if I have any mails at all. They will stop in December. I will stop sending mails. Everything I'm going to be doing, aside the videos on my YouTube channel, are going to end in December. So that's pretty much it. I think this is why I actually ended the class. So please subscribe. Uh, please subscribe to this channel. If you see this on Facebook, like, comment, share. If you have any questions, drop it in um the comment section. If you have any video you want me to do, any video you really want me to, any topic you want me to talk on or make a video on, just tell me in the comments. I will definitely get to it. All right. I think I'll be dropping my 5G series um video within this week. So you all should expect it. All right, take care guys. I see you.